main way to actually level up your skill in regards to Bitcoin mining is to take somebody else's loss that they weren't able to do it, and you build it yourself back from that. And I've seen more people become successful with their mining endeavors by, just buying something that's either broken already, and then learning how to fix it, or basically I'll tell them to, just buy something that's used and works, and don't be concerned if you break it, because just it's already used. You might get it for $2 a terahash, and so it's not going to be, you know, a big loss or anything. In fact, the knowledge that you'll gain through that experience is going to be more valuable than your investment was into the actual equipment. And so that's kind of how I lead people when it comes to how they want to get involved, and what they want to know.
Yeah, that's great.
I couldn't agree with that more because crazy enough, the pill that I took to send me down this crazy rabbit hole of Bitcoin mining was searching for cheap ASIC miners for between two ASICs. And I ended up finding two S7s on eBay, which S7 I think is 2 or 4 terahash, I want to say.
Yep.
And because like I literally just needed
Or
something to look like it. I wasn't gonna like, get an actual spend a couple $100.
you
And
just needed
I
a
saw
LARP.
two of these. Exactly. I saw two of these things for $40. The guy was like, "Hey, I'll 10 extra dollars. I'll throw in a third one." I was like, "Nah." He's like, "All right, I'll do it anyway." So I had three S7s, and I'm like, I kind of want to figure out like how this works, and just started tinkering, started playing around with it, and
Hmm.
that literally like all you had I had to do was get my hands on an ASIC miner. And if anyone ever wants to learn about mining, that is my main thing that I always say is just get your hands on something, whether it is I wouldn't recommend, getting a brand new miner to learn about it. Go on eBay, find some scrap for under
Hmm.
$50. You can still do that. And
Yep.
then next thing you know, you're going to try to figure out how to get 240-volt into your apartment.
They're seeing the meter spin and the electricity is included in the apartment, and now you've raised some serious questions. Why is the panel off on your electric panel? What's going on here? What is that there?
Quick, one last quick note on that. Last year, my first winter in Denver, I figured out that my rent was all inclusive, and so I was like, of course, I'm going to figure out how many
Bingo.
110 miners I can put it. I was plugging in all my S9s. I plugged in a V9. I plugged in a V9 and ran it profitably, and
Hmm.
then we got an email that said, "Hey, we're going to investigate this massive spike in electricity, uh, and we might have to."
And then you just, slot the breakers individually down the panel, and then whenever, like you said, when they come, there's like it's just wrap it like it's just wrap it up and toss it under the bed. And you can usually expand those to make sure that just of the load itself in the size of the panel, because you might have 20 or 15 breakers in that panel, and this, like, you might have a few more slots for more, but the way they build electrical panels, all those breakers aren't consuming at one time. So if you actually know what you're doing in regards to electricity, I would,
That's
if
where
I was, yeah, you want to
that's where
be understanding what you're doing here, or else you could very easily end up smoking yourself right out of your boots. Um, or consult with somebody who you know and trust, verifiably can trust, who's an electrician, to guide you through how to set something up like this. There's a lot of sats that can be had for virtually no cost.
That's awesome. All right, well, gents, conscious of time, I'm going to start rounding out the show here. But there's a thing that I like to do at the end of every show. Really, really, really simple. I like to just go round robin one last time and just quickly ask each person for any final thoughts that they want to get off their chest, like a kind of like a takeaway from the show, and then more importantly, perhaps a recommendation, and that recommendation can take really any form. Maybe it's a good book that you read. Maybe you want to pull from the show. Is people stepping outside of their comfort zones? I suppose because that comes in with the mining, but it also comes in with the idea of beginning to use Bitcoin differently than maybe you have before. and so I guess this kind of plays across all of them. But um, you should always be trying to grow as a Bitcoiner. Like try not to stand still. A lot of us will get to a point we know our few things that we know, feel pretty good about that because those were big hurdles to get over. But then once you're comfortable and you set up, you don't do anything new. You don't progress. And so try to get yourself unstuck from that point and choose an aspect of Bitcoin that is new to you that you can excel in. And maybe this is like upping your security game just around your stack. Maybe this is beginning to use it in a more day-to-day manner, and like seeking out merchants or becoming a merchant and accepting Bitcoin yourself. Or maybe it's some of this pleb mining stuff that we're talking about, or maybe it's something like run a node. Whatever it may be, just don't don't sit there and be sedentary. Go out, learn, and level up because it's always gratifying when you do. And in
Always be learning.
Yes,
Mhm.
exactly, exactly. And in terms of recommendation, I'm going to say just on the topic of the pleb liner things, the nerd app will just to kind of like tinker and see how it works. Uh, Definitely worth peeking at. So those
Those
are
are fun because they run on Wi-Fi too. Sorry
Yes,
to
Mhm.
interrupt you.
exactly. Yeah, that makes them pretty simple. So, yeah, with that, I'll toss it over to Raj first. Any final thoughts, takeaways that you wanted to reiterate? And if you have a recommendation, that'd be awesome too.
Yeah, thanks, Ben. I think it was really great to learn more about solo mining, pleb mining. Really excited about that. Um, One thing that I would like to share, which I kind of have more conviction about, is that we may not repeat exactly the same Bitcoin cycle of it quickly pumping up and then crashing down 80%. Maybe not this time. Uh, yeah, I believe all the CTF and financialization, more liquidity, and people being able to speculate on the derivatives instead of buying it directly would help taper the pump and will provide a cushion or a bottom to the crash, and we might see more gradual and sustained trend of Bitcoin with lower volatility overall.
Mhm.
So really looking forward to that. And yeah, I would say in terms of recommendation, the Broken Money book by Lean Alden.
Yes,
I would definitely strongly recommend that. Awesome book. Yeah.
I got it up on my shelf there. You can't quite see it, but
I'm
yeah.
honestly really shocked that he didn't say, I recommend Speed Wallet.
Speed
But
wallet.
anyway,
Yo. And
I like
the volatility is part of the fun, sir.
yeah. Raj recommends you're faster taking those sats next time. Otherwise, it's gonna steal.
he recommends being ready with your Speed Wallet whenever there's a giveaway.
Boom.
Yeah.
That was
I love
awesome,
it.
Rod. That was
I
great.
Yeah,
respect the hell out of that, Raj.
yeah.
Yeah.
I also love the like pleasant sound that played as they were snapped away.
It's awesome.
I do like the sounds in the wall. It's great. Awesome. Well, thank you for that, Raj. I appreciate it. And Tatum, I'll toss it to you next. Any final thoughts, takeaways, and a recommendation? You got one?
Yeah, so I'll go ahead and preface what I would say with this. I'm a comedian. I make jokes all the time and I talk in satire. So think about that whenever, I say things. So the the first thing I'll say is sacrifice convenience until you're not free. The second is oil your kill switches. It's better to have them and not need them than need them not have it. And then my recommendation is comes from a lyric in a song, one of my favorite songs by Kevin Gates. It goes, "I got two phones, one for everyday activities and one in case I need to fake my death." So that's my recommendation. And remember, I'm just a comedian, silly. But also another recommendation that's a little more serious than fixing a phone is to, like I said, go on eBay and find an ASIC miner for under $50 that, even if it's just for parts, do it. And actually get it in your hands, take it apart, see if you can put it back together, because that will unlock so much potential that you may not have know that you have. Like when before I started into mining, I honestly kind of wanted to push it away because it was just like super confusing. I saw people like HT. I'm like, I can never be him. And then I went down the rabbit hole and realized I don't want to do anything else with Bitcoin. So it's also just a good skill set to have.
That's awesome. Love it. HT, I'm going to toss it to you then. Final thoughts, recommendations this is all you.
Final thoughts is that um, happy to see how things are progressing in regards to mining. Um, and recommendation is, like Tatum said, go ahead and get an ASIC and then find a way to offset your costs. Don't be a cuck to just profits only, like Pubcos. And just know that the obstacle is the way.
I love it.
Hey, winter's coming up, baby. Winter's coming up.
Very
Brr.
awesome. Well, gentlemen, thank you so much for joining me on this show. It was a blast. I had a lot of fun. Everybody that's watching, make sure you check down below. Give these gentlemen a follow to see what they're up to. I'll just leave you guys by saying you're all welcome back anytime.
Thank you, sir.
Thanks for having us, Ben.
Cheers.
Appreciate it.
All right. And everybody watching, thank you for being here. Of course, again, follow everybody that was on the show. They are down below. You can check them out there. Do those other great things like subscribe, share. They all help the show. If you want to help out the show as well, previously mentioned sponsors are down below. And the last thing I'll toss out there is if you've been checking through the channel, doing the tutorials and everything, and you're leveling up, but you've hit kind of a block, and you're trying to learn more, but there's something that you can't quite get around. Be sure to reach out to my team over at bitcoinmentor.io. We've aggregated an incredible team of educators that are waiting there to help you through anything, whether it be as simple as wallets to hardware to multi-sig to Lightning to running a node, home mining, like we discussed, all those great things. You can reach out again, bitcoinmentor.io. You can have a free 15-minute call to chat about what you might be looking to learn about. And then if it sounds right for you, then you can go ahead and book your first session. Anyways, with that, I am out. Have yourselves a wonderful day or evening, and I'll see you guys next time for your daily session.
Hodl the Bitcoin.
It certainly will repair the balance sheet if they hold Bitcoin. We all know that it will. And the second thing is we know that they're going to do it. They're going to try to do it. So Bitcoin at about 1.2 trillion is still larger than sterling, which is about $1.1 trillion. We passed the Bank of England. Lending the Bitcoin at any interest rate right now, it's definitely not worth it. In the face of a debt crisis, stablecoin demand for U.S. treasuries could be a way to. 6 years ago, Bitcoin was a couple $1,000, and the monetary base was under $20 trillion. And now Bitcoin is $60,000, and the monetary base is.
This rip of TFTC was brought to you by River. It's the best place to buy Bitcoin. Go to river.com/TFTC and enjoy this episode.
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven. I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
The button has been hit. Last day of recording from the back porch here in South Jersey, and the weather
buddy.
has hit us with what seems to be the beginnings of a nor'easter. I don't know what this is, but there's a lot of wind. Bear with me, freaks. We are streaming, I hope so, on Zap.stream. We are live on Zap.stream. First Noster live stream of TFTC's history. So thank you guys for joining us. We're here for our monetary base update with Matthew Mazinksius. I had the pleasure of being in person with this fine gentleman across the world from me last week. Baltic Honey Badger recap, your perspective. My favorite conference, 4th time there. I fucking love Riga, Latvia.
Great to see you there, man. Absolutely inspiring weekend as always. High signal and just no bullshit. It was great. Loved seeing you there. What were your impressions 4th time back to Riga? Anything changed since 2018?
No, just people are more familiar with the crowd there. It's like catching up with old friends now. I love old Riga, walking around. That's where I stayed again this year. It's just a beautiful city. Had the pleasure of experiencing a traditional Latvian sauna the Thursday before the conference. That was an experience.
How'd you like it?
I liked it. I mean, they beat the crap out of you, but it did feel good afterwards. It was a good experience.
Yeah, it's great, man. No, I mean, I love it. It's just great to have the honey badger always come back to my neck of the woods. And, you know, we talked a little bit about it, but I mean, the people, just young people here in Latvia and in the Baltics just continually getting inspired by Bitcoin and FOSS stuff. And I think it's fantastic. I mean, it's a big change if you juxtapose it with some of these slower, older grain economies of the Western world. Eastern Europe is just hustling and bustling, man. So it's really great. It's great to have the conference come there. I was inspired.
Yeah. And Max and Anna do a really good job of curating the content in terms of Bitcoin conferences around the world that I've been to. I think that's the most high signal, most critical. Like, what are we doing here? What are we building? Mixing in the economics with the technical. And, I don't know, I always feel reinvigorated walking away from Riga. Though the travel's long, I was jet lagged there, and then I was jet lagged here. But I feel like I'm fully caught up now. I've had three nights in a row of 9 hours sleep, which has been good.
Oh, good for you. That's lovely. But you've been active with the kids?
Active with the kids, yes.
Enjoying the summer by the beach, Jersey Shore?
Yeah, we went to a bayfront water park yesterday, and I was launching kids into the bay. It was fun. Have to reconnect with your inner kid every once in a while.
I love it, dude. You were showing me pictures of the fam playing around this summer. You just look like the typical Irish dad that I remember from my childhood. Just active and you know, with the polo shirt and the trucker hat, just running around. It was great.
Throwing kids around.
Happy for you.
Well, I'm happy for all of us. We're here. Where should we jump in on this episode? You've only released the update on Noster right now, correct?
Yep. It's just on Noster. Another thing I was inspired by in Riga, I just said, you know, I've been on there for a while, but I haven't been posting too much. And I was like, I need to get to the full long form content of this, you know, these charts and the research. And what better place to do it than, you know, Noster and Highlighter and Primal and everything. So that's where I am. And, you know, we'll see. Maybe I'll get it to Twitter whenever I get it there. But yeah, it's update number 25, Marty. So it's been 6 full years, starting the 7th full year, 25 quarterly updates, which is pretty wild. You know, when we started 6 years ago, Bitcoin was obviously a couple $1,000, and the monetary base was under $20 trillion. And now Bitcoin is $60,000, and the monetary base is $26 trillion, down from $30 trillion in the just start of 2022 post-COVID money splurge. So things have changed, but it's not slowing down. and did a couple different things. I think it might be interesting to look at. I looked at, a lot of different assets this time, like stocks, bonds, population, GDP, the global increase of gold, silver. And I just wanted to show them to the reader on like a sort of global, like what's the trend line. We've talked about the power trend lately. That's got some attention lately. That's fine. But most stuff in finance, economics is on an exponential curve, basically due to compound interest, right? So that's just means constant growth, exponential growth. That means the same percent continually compounding year in and year out. And for example, if you have something like 10% compound growth, it doesn't double in 10 years. It's rule 72. It will double in 7.2 years. So take 72 divided by the 10 minus a percent sign. You will get 7.2 years. So that's kind of the brass tacks of always how I've tried to look at it. Don't look. What's the size of it and what's the relation? The 1.2 trillion is still larger than sterling, which is about $1.1 trillion equivalent, and marching on. So I can show you that if you want to see the actual chart. Here we go. Thank you, Logan. So this is just this is the curve. You've seen it a lot if you've been following 2022 phenomenon here. And I'm trying to quantify 4 trillion. But if I asked you, and I've mentioned this before, so I like to give these little quizzes, right? If I asked you, does that mean that banks are on balance printing something like, would you say true or false, right? Because we're down over 10%, right? From 30 trillion in 2 years. So does that mean that, 6-7% per year banks are printing?
Seem that they are, but I feel like there's a gotcha to this.
Gotcha is very interesting. They're still, they're flat, and I'll show you in a second. But really what you're seeing here, this decrease down from 30 trillion is this is Wittgenstein's ruler, right? We can't orient ourselves because there's 50 different currencies in this data set. What this really is, this 26 trillion less now versus 30 trillion in 2022, what's really happening is all other currencies are losing value against the dollar, but they're flat, or in some cases even printing more units. Follow that? So they're still printing. Yes. Yeah, so that's an interesting thing. Now some of them are decreasing. We know the Fed is decreasing its balance sheet. It got almost to 9 trillion. Now it's at 7 and change. So the big ones, they are down. But overall, it's not necessarily like major decreases. So I'll show you that now here. And my greens may be wrong for this chart actually, but so this is like a trailing, be at a rolling negative 10% here per year, being at 30 trillion in 2022 to being at 26 trillion now. But you see, and I'll zoom in, you see the negative numbers, right? These are rolling trailing 12 months, these bars. They're just barely negative. Negative 2% here in the end of 2022, and then we went positive start of 2023, and now we were negative 1.4% in May 2024. Now we're negative 0.3% in 2024. So that's very interesting. So there are a couple different ways to do this, but as I'm doing it, as I've done it for 6 years, is you're taking each money, right? And then you weight that by the size of those monetary bases themselves, of course. But how do we weight that? We have to put in exchange rates there. We have to look at the dollar value of those. But I'm only looking at month by month. So 1 month, if it goes up, blended 2%, it's that, and it's completely. Got my Apple fireworks going there, I think.
We can't see it on the screen now, but
from my hand gestures. Okay. Anyway, point is, it's a month by month thing, and it just resets every month, right? And then I count it over the prior 12 months to give you this number. So it's very interesting that basically you would think from 30 trillion in 2022 down to 26 trillion now, you would see some very big negative numbers when they're not printing as much. And it's true, they have cut back. But overall, it's way less than it might seem if you just look at the dollar figure. So again, zooming in, when peak COVID was happening year on year, right? October, November, December 2020 into February 2021, March, we went up blended 33%, all currencies, okay? And that translated into 29 trillion divided by 20 trillion, okay? And that actually looks pretty close to the example. So March 2021, it's 29.11 trillion divided by March 2020, it's 29 divided by 21 trillion. But then my trailing 12-monther that I find is 32.3%. So it's pretty close, slightly different, but it's pretty close. But what these green bars are they're very like, in my opinion, like as rigorous as I can be with something that's nebulous, like 50 different currencies. I'm taking each individual unit, counting them up. What are those rates of growth? And then weighting that weight by the entire basket. So that's how you do it. So it's interesting that on the way up is pretty close, right? Value collapses for so many of these currencies. And that's because, but the rate of decrease of the money supply doesn't necessarily collapse, as you can see. It's still like flat to zero, these bars here, right? It's like negative 1.4% at the end of the end of last quarter is negative 0.3% year-on-year growth, TTM growth. So again, to be clear, what that is saying, what that's interesting is that they're still printing, or they're kind of, because so many currencies have just collapsed in value of the dollar. Visually, the best I can show you this by counting them up is that we lost, the monetary base has shed $4 trillion in value. But they are still, like, they did not shed 10% per year or 10% over 2 years, a little bit more than that, right? Of their balance sheets. They're more or less flat, a little bit down. So that's pretty interesting, in my opinion. Those currencies just are losing value. Anyway, if you want to take all the noise away, the number that has been closer to 13%, sometimes been closer to series of the entire 50 plus years. And that's 12.7% compounded, or a little over 1% per month. And even with that, like, you can look at, what they used to call stable central banking, right, back before Y2K. And even Y2K, that bump, that's because precisely of Y2K. People were afraid of Y2K. That's why cash balance just spiked up here in 2000. But then obviously, you had, they tried to raise rates after they printed a lot after the dot-com 9/11 tandem. And then the global financial crisis came, and they just printed a lot. QE1 is here, 2, 3, just massive amounts of year-on-year printing, right? Like, as you see there, the second item in my tooltip, 30% May 2009 over May 2008, 32% July, 31% August over August 2008. Massive amounts of printing. Then they try to normalize it even before COVID. And then they had to explode it again. So the point is, if you just look at this 50-plus year chart, you can see, okay, for the first 25, 30 years, it's kind of hovering around this 12%. And then it's just much more sporadic and wild in the prior 25 years. Which I thought was interesting if you just kind of compare what's happened over the last 2 years with that. Again, like I said, 30 trillion 2 years ago to now 26 trillion now. So it's Wittgenstein's ruler. It's hard to do like a global blended way, but I've had this method for 6 years, and I think it's pretty close. It's pretty interesting. Also, this method works, like, for example, I don't have China's data in the first 30 years. It's definitely there. Someone in, I think, December of 99. But, so my method, obviously, if someone's not in the basket, it's interesting that, we are $4 trillion left. It almost seems like they're really trying to normalize. If you look at the gross dollars here, dollar value of the base money, liquidity in the central bank system. But like I said, what that really means, if you look at units upon units, like euros upon euros, yen upon yen, so on and so forth, and you weight that, you're kind of just flat rates again, which means print money.
Yeah, and I think that's what's most surprising about the the end of this chart. We've had 2.5 years of aggressive posturing, particularly from the Fed, hiking rates at a pace that they have not done in quite some time, and really trying to beat the drum like we're going to pull money out of the system to quell inflation. But it seems like would you consider the data that you just presented like proof that not as effective as they would have liked it to been?
Yeah, or just for as much as they talked about fighting inflation and getting things back to normal, it really wasn't that much. Like, let's just go through it, right? So they pulled it down like 2%, 2.3%, 1.4. Okay, so on a trailing 12-month basis, they were pulling it down a little bit globally. Again, that's not reflected in the gross dollar value falling because all those currencies were getting weaker simultaneously against the dollar. But then they already increased it again globally by the end of 23, up a couple percent, and now just a little bit down. So basically flat. I mean, all that they've talked, this is a global take, right? This is a worldwide take. So as much as the Federal Reserve might have been saying, well, we worked hard and we quelled inflation and we, took interest rates above 5%, so on and so forth. In reality, the world is it's been too difficult for the rest of the world to do that. And you can just look at this chart. Look at what is below zero on this chart generally. It's not often. It happened once when they were, when they had the repo spike in September of 2019 before COVID. It happened like 1 month in December 2000, year on year, 0%. You see, like negative 0.0, rounded to basically zero. Money growth, and then just these last couple years, been the only time that money growth has been negative. And so, I would say not only is it not indicative of like perhaps being effective, like you said, I would just say it's trying to get with a lot of this stuff. And what they do has been plus year on year for many, many months in a row. But now it's flat, and they're all, even the big banks are signaling that they're going to drop rates.
Presented by River. River's the best, most secure place to buy Bitcoin in the United States. Go to river.com/TFTC, set up an account today. You'll be able to DCA into Bitcoin without paying any fees. You'll be able to give people Bitcoin via River links. You'll be able to send and receive Bitcoin over the Lightning Network. And you'll be able to set limit orders. If you want to buy Bitcoin at a particular price, below or above where it is now, you can set orders to buy Bitcoin when it hits that price. Go to river.com/TFTC. It's a financial services platform for a Bitcoin standard. They have over 7,000 clients that are securing over 90,000 Bitcoin with 12,000 keys on their platform. 2 or 3 multi-sig vault, which allows you to hold 2 of 3 product, a lending desk, and set up a call with their concierge onboarding team today.
Well, that begs the question, how aggressive PI would have you believe that it is somewhat closer to the 2% target. People do not feel that at the grocery store, at the gas station, when they're buying, and show must go on. You look at commercial real estate, seems to be rolling over. Their jobs reports, they overreported by 1 million jobs this year. The jobs market is not as strong as they were positioning. Props are due. They did revise GDP, Q2 GDP higher to 3%. So it seems like GDP may be higher, but haven't dove into the intricacies of that print and how that can be manipulated. But it seems like, was this rate hike regime successful in any way in your mind? And whether or not it was success month.
Right. I think it was par for the course in the context of this new normal that we're in. That new normal being those just crazy peaks and troughs and spikes that I showed you in the last 25 years. It's par for the course of the new normal, and it's going to continue. Obviously, more aggressive than they would like you to believe. But as for the rest, and actually I can show you GDP because I showed this one on the put it on log scale. Is a straight line, right? Okay. So here's the Great Depression, fell way below the all-time trend, the growth of the 80s in particular, and then into the internet age, you see that we're up at the top end of this trend. So we actually are above trend. And I don't trade this. I'm not saying that this is like gospel or something. You know, maybe someone can go back and find some more interesting data. And, you know, it looks like I have no idea why it's like above trend, right? In the early 1800s, I mean, the United States wasn't that great, and they had a lot of national debt at that point. But whatever. In any event, the all-time trend is if you measured the slope of this curve, okay, the all-time trend of GDP is line per year, 5% per year, and you see that on a dollar basis, 28 trillion and change, ending June, where the trend line is only 17 trillion. So again, this depending on how much data you take, the trend line's not really important here. It's just to show you really the growth. Some of it's inflation, and some of it is the internet, because you see it that after the last 25 years, basically, it's always kind of at a higher level than what it has. As you know, and we've talked about a lot, it's just nothing to really get that excited about. It's always going to go up as long as we're in this fiat system. They're going to print to make it go up. It goes up at 5%.
Yeah. So how's Bitcoin faring in all this? Q2
Yeah.
2024, pulling up the year-to-date chart, looks like it's pretty flat. Maybe flat to down. March 30th, we were at 70 or 60,000, like right around. So we fell through Q2. How did that affect Bitcoin standing in the global monetary base?
And at the moment. And for all of this, by the way, you can see it on the Nostr post, the last chart. I have a full breakdown of all the 50 currencies that I review, central bank data. And for those that are just tuning in, never heard of the monetary base before, don't know what the hell it is. It's just the cash that the central banks print, like physical cash that you know, notes and coins. In the United States, it's different if you're paying attention. The bank reserve account, which is basically the fiat sort of main account of each bank at the central bank. So it literally is there. I've shown you variations of this chart before. So this is price, right? And here's the power trend price. So unlike all the other things, and there's more exhibits like gold, silver, stocks, bonds. I talk about that as well in this update. Those all are, and people may think, oh, it's how can it decay and all this, and we talked about this before, like put some per year return figures for Bitcoin, and they were like more conservative than what I have from what I recall. So that's also funny. But in any event, here is the price on this curve. So 96% R squared is pretty solid. You know, I've already been looking at this for like 2 years. I first posted about this. We'll see where it goes. But you can also look at the returns. And this unfortunately, I dated this a couple days, about a week ago, reversed this. And instead of looking at the price, we wanted to look at okay, say you bought Bitcoin here at June 16th, 2011 and held it until today. Okay, now, rather than say like I bought Bitcoin in 2011, got a 50,000% return or 100,000% return or whatever it is, it's easier if you can put it into this, as I mentioned, this compound return or like an annualized return. And this is like as scientific as it would be. This is an account number of days. And you bought, say, at this peak, June 2011, $35 Bitcoin, you would have a 75.5. If you take $35 and you multiply it by 1.75.5 for a year, and then another year and another year, all the way until today, you're going to get Bitcoin's price. That's how this calculation works. So this is actually kind of like how you would do a bond yield calculation and things like that. You can do it for Bitcoin; it's not a problem. And this is the return. Now you notice it gets a little wild here. The compound closer to, as we're annualizing, as you get closer to today, that they get a little bit more volatile. So I don't take all of the data into account. I stop like 1 month before today, or 1 month before August 21st in this chart. But basically, imagine now if we want to smooth this out and understand where this is going, we can put a trend line on that. And how would that trend line be? Well, it would simply be measuring this, doing the same calculation, but measuring these returns on the trend line, on this black trend line. And if you do that, then you get this nice trend line here. So I'll take off the actual price, just the actual power trend price, just to see and just to show you. So here, if we go back again to 2011, so you bought at the peak, June 10th, $35 Bitcoin, 75% return because you were over trend. I'm not showing the trend. I guess I should put it back on for my example. There's the trend. Trend price is $1.64. Okay, but Bitcoin in June 2011 had one of the first booms, and I think around this day it was the first MT Gox hack as well, although it might have not been known at the time by Carpellis. But anyway, $35 price. The trendline price back at that time was $1.64. So if you had bought at the trendline price and held till today, you would have 126%, as it says. But if you bought at the actual price, you have 75%. Both are enormous returns, but that's how it works. And then if you just smooth this out, look at the times that you bought above trend. Look at the times here, for example, in the crypto winter, if you had bought below trend, or again in 2019 during COVID, below trend. As then look at the green arrow there. Sorry, the green dotted line, and you'll see that your returns are above or under trend. So now we can smooth that out and see really where Bitcoin's been. Clearly, this not only does the price trend work, but also this return trend line, right? The last dotted line, which curves down. So if you were, Trace Mayer or Roger Ver or any of these guys buying back in 2011, right, around $1 per Bitcoin, and the actual price, early 2011 is about $1. Also, trendline price was about $1. That's 126% per year, still to this day. That's what it is. 126%, 130% per year. And then it falls, but you'd be surprised how little it actually falls. If you go all the way until today, here, when Peter Zion was on Joe Rogan saying it was 17,000 overvalued, when it was 16,000, your actual compound growth buying Bitcoin in December 2022 was 111%. Still, right to this day. 16,800 then, 60,000 now. So, you can certainly make returns. Obviously, never financial advice, but you can much more easily look at the dips here and see when it is to buy, like under trend rather than over trend, in my opinion. I think generally people agree with that, right? So you can have huge returns still on a compound basis. Look at if you bought under trend here in September 2023, a year ago, you'd have 136% return per year, right? Because Bitcoin was 27,000 then. So that's how this looks. And then if you smooth it out with the compound curve, you get to today, about at 45%. That is what Bitcoin runs at. And then if you're running, well, how does this chart even stay at 40? What if I go out a day? What does that matter? Well, and again, this is a week ago, mind you, but if we look at the trend line, actually, it doesn't matter if it's a week ago or not, but from this point, if we look at today, August 30th, $59,508 Bitcoin, and then tomorrow, but the trend line is 78,823, right? 78,823, and tomorrow, the trend line is 78,903. 903. Okay, so that is a $80 increase. That $80 increase is what translates into this 45% per year. That's why you might be wondering, how can this still be 45%? It's just measuring the growth of the curve. So something to pay attention to. Again, through all the noise, through all the nonsense, the trend line is increasing $80 a day, and as a bonus, we are well under trend, 20 grand under trend. But if you're on trend, the trend line increases $20 a day, or $80 a day. That translates into a 45% compound annual growth, and you pull that out all the way to the end of the decade, you're still at 36.4% per year. So, bottom line, still enormous opportunity, enormous returns, and distributed money that's permissionless. So it still looks very good, even though it is the fifth largest. If you compare it to fiat money, it's the fifth largest.
At 1031 with portfolio companies, and I'm sure you saw Grant's presentation in Riga about Sats Flow and how we means about should they hire, should they invest in R&D. like what should the hurdle rate in their mind be, and it is that CAGR of Bitcoin over the long term. So having this historical data is actually very valuable, because ourselves and others within the portfolio actually have a higher CAGR, like anywhere from 55 to 65%. So
Yeah.
actually honing in on what it is historically, and yes, you may be above or below the historical trend at any given point in time, but having this data as something to reference when you're running a business and trying to outperform Bitcoin as a benchmark, like this is very valuable.
Yeah, and indeed, Bitcoin is the benchmark. This is the benchmark, and right now, it's running at 45% per year. And by the way, we're 20K under trend, so that should be viewed as a benefit to people that want to get in. I mean, that means it's going to be more once it gets back to trend. Quite a bit more, right? It's running at 45% per year on trend. And by the way, we're 20K under the trend.
Quick break here, freaks. This rip is brought to you by Gradually Then Suddenly, a framework for understanding Bitcoin as my Bitcoin obsoletes all other money. Buy one for yourself and maybe a few for your friends. Go to thesafehouse.com/gradually. That's dollars off at checkout. Buy it now, freaks. The price of Bitcoin is going up. You need to understand it. This is the best 0 to 1 primer. This rip was also brought to you if we believe that fiat is systemically fragile and is a risk. The rails that currency runs on are risk as well. You need to begin accepting Bitcoin as soon as possible and risk for your business. I'd like e-commerce stores accept fiat as well. The time is now with Zaprate. Go to zaprate.com/TFTC to get $40 off their annual subscription. Zaprate.com/TFTC, $40 off.
Well, this actually brings up a good point too, because historically, before, Bitcoin launched in 2009, and you had essentially zero interest rate policy from 2009 to essentially you had that blip in 2018 to 2019. But this time was like, it's a child of low interest rate policy. That's the only reason why the price has gone up. But maybe we should touch on, sir, I'm recording a podcast right now. I can't help.
Bitcoin's market cap, as we talked about, number 6 in the world, including gold. Let's look at Bitcoin's market cap and see how that lines up with these increases or decreases in the money supply, in the fiat money supply. So I'm going to put that on in the bars here and take off. First of all, notice that that my axis is it tops out, and on the right side I have ace money side and negative 40% on Bitcoin side. So it's a multiple of 4. So keep that in mind. They're just so huge that I have to try to make this somewhat clear. I gotta cap the chart. But notice that in 2017 to 21, we were pretty much
GM hot beverage
of base money. You see that base money would be growing here at whatever 15% per year, 12% per year, just up and down. And by the way, they weren't even growing. The Fed was growing none at all here. That from 20, think about that. And a lot of Bitcoiners would be saying that all the central banks do is print money, and it is true. And globally, generally they do. But the Fed wasn't printing money from, say, mid 2014 all the way until COVID, essentially, until the repo crisis in September 2019. Nonetheless, you see that this money is being printed all the way in red here, sometimes high, QE 1, 2, 3. And then it starts to finally taper out to that, negative or level rate by 2019. Now look at the change price of Bitcoin. This is a change in value of market cap. Okay, the value 1,000% increases, right, all the time. And then when we go into the bears, okay, big decreases. It can go all the way up to 70%. I think there was a 70% this one. Yeah, there was. I caught it and I lost it. Let's zoom in. There it was. January 2015, year on year. January 2015, Bitcoin's down. Same thing happened in the next boom run up, 2017 all the way to 2021. Or I should say, let's say the bottom of the crypto bear, as they call it, the crypto winter, till the start of the boom after COVID. So it's interesting that basically from this this repo crisis period, it almost started to line up. Bitcoin started to line up more with what the fiat central banks were doing, and they're still going crazy, and Bitcoin is even growing crazier. But now you can see here from into 2020, 2021, the peaks are lining up, and even the troughs are lining up. So the decrease in Bitcoin's value in 2022, amidst all those scams, lined up even with the decrease in the COVID money print amidst, high inflation. And now Bitcoin's changing again, and it's already been changing over the last year. And there's a little bit of that money printing that happened at the start of this year and the end of last year from the central banks, as we see here, just a couple percent. Bitcoin up 165% at this point, February 2024. But this is an interesting question, and I wonder if we've actually made it. Like, if this is already it. I mean, and by it I mean if this is like a full-on. We were completely uncorrelated asset class before, but I wonder if now, because it's lined up.
And
yeah,
if we are going into lower interest rate policy, monetary base expansion, could the
it's perhaps too early to tell, and we know Bitcoin, or people expect at least, Bitcoin's still on its 4-year cycle, a year after the halving, things people think. Interesting. I hadn't really noticed it before. I haven't lined it up like this. And people kind of think about it. They always think about, okay, central banks print, then Bitcoin's going to go higher. That's been the narrative. But really, that wasn't what was happening before. It was completely uncorrelated. They were always printing at steady rates before. It's lined up. It's lined up, and I think that's interesting because I can't see if it is not coincidental, then the money supply works. Then I don't see why that would decouple anytime soon. But we'll have to see.
Yeah, it's Bitcoin going through its maturation phase in its nascency, and not like that's actually bring up a good point too. That's talking about like 4-year cycles, and will they continue? And I know we've touched on this a couple of episodes that we've recorded so far this year, but like, how much of an impact do the ETFs have? Does Bitcoin, if it becomes like a de facto fiduciary responsibility for corporate CFOs, the fact that we've had the halving, 3.2125 Bitcoin being distributed every block now, supply being taken off the market by all these new, bigger, well-capitalized actors in the world, throughout the world.
It's not locked in stone. It's not locked in stone, right? I mean, how much do you expect? You probably know this figure better than I do, but what do you think is locked up in, I say real, I mean like, active major corporate entities in the space? Yes.
So including we'll take out DeFi, smart contracts. So it's private companies, ETFs, and other funds, governments, and public companies.
Yeah.
Those 4 actors.
So that's the question. Like I said, it's interesting to me that we're lining up this cycle. We're lining up with what the regular mainstream established legacy fiat monetary, based on what the power trend does as well, is that the 4-year cycle, just Bitcoin as a system growing that way is stronger.
Which historically have been weaker public companies, ETF.
That's in long-term locked up. Certainly it can affect the price if a whale decides to move some of that. We know there are big whales, right, that have huge amounts of coins, but I think Bitcoin's 4-year cycle is going to be stronger. I do, personally. I think it's going to be stronger than this for now. Any of these narratives, I think it's going to continue to do what it does. Less possible that it could decouple again. With this, whatever the central bankers decide to do, they're, we talk about unrealized capital gains for people and just doing things that, in the regular legacy fiat world they do. They don't think about long-term, low-time preference type assets like Bitcoiners do. So guarantee that will continue. Let me say it that way. And if one of them is going to continue, I'd say it's the Bitcoin cycle over whatever these jokers tend to do with their money printing.
Yeah.
I think it's going to be, time will tell here. At least for this halving, I think it's completely independent of whatever anybody does in any government.
Well, we talked about treasury issuance earlier, but I think the auctions that are happening, the duration of the debt that's being issued, it seems like they've been heaven. So you have the situation where that has had somewhat of an if you looked into that, there was a paper written about it a couple months ago, funnily enough, co-written by Nouriel Roubini, but I read it, it was pretty good. Higher and for longer, the Treasury decided that they needed to step in and sort of inject some liquidity into markets with these front-end loaded Treasury auctions over the last 2 years.
Yeah, I haven't read it, but I mean, I understand the concept, and that's clearly, they're going to have to keep doing something to keep the interest there, and officials' position at this point. It's just so, they're in such a rock and a hard place. So, you know, I don't necessarily think that we're going to find anything drastic here. Let me say Bitcoin in relation to the legacy system, as I talked about, right? But, you know, has anyone checked in on Austria lately, right? They have 100-year government bonds. And, you know, maybe the U.S. will go that route and just start expanding. We're so good that you're just going to have to take on our debt for 100 years.
The big knock on Trump, like he should have issued a 100-year bond, or Yellen should have, during like COVID when it went back down to zero. And they just didn't take advantage of that.
Sure. Well, we saw a lot of that effect a year ago from the people that made the mistake of being in those types of instruments, right? Their values get hammered if you're buying some long bond locked in at 3% or 2% when rates are at 0%, and all of a sudden what happened? And then they have to offer these different liquidity facilities. They have to offer these different promises. Like, it's just a game that, like I said, I'm not envious of the people that have to play that. But again, that's why we're in Bitcoin. I don't worry about it too much, honestly. I really don't, because we know that there's like a real escape hatch. There's real value there. The asset is just super global with Bitcoin. I mean, it's going to be, what did Trace Mayer used to call it? I think it's the risk-free rate. Like, that's going to be the risk-free rate if we're gonna talk ever. Maybe with the stuff that DebiFi is doing, I could borrow against Bitcoin at if it's too detached still from what the regular financial system is offering. So whether it's 3%, 100-year Austrian bonds, or 5%, I'm not interested. And I'm sure that you aren't either. So that just shows you how decoupled we still are from the markets. You know what I mean? No, 3.8. Yeah. The one is 4.4. The 10 is 3.8. So it's quite inverted. Which again, it's just clown town. I mean, yeah,
Well,
it's
that's the other crazy house in order here in the United States. Like, demand for the long end of the curve specifically has been dog shit. Like, you've had 10 and 30-year auctions with terrible results in the last couple months alone. And again, they've been over-indexing on the short end of the curve. But even there, like, you look into who's really driving demand for these auctions. Like, Tether is quickly climbing up the list of one of the biggest buyers of these bills because of the way they need to manage their liquid treasury for their stable coin. Like, what is the emergence of Tether into the treasury auctions? What does that represent in your mind?
An embarrassment. Just an absolute embarrassment for everyone involved. I mean, it's hilarious. I mean, these are the people that, you know, they want to come after, right? These are the offshore, greedy, dirty Eurodollar holders of their currency that they can't control. This is the people that they denigrate and hate, you know. And I'm not, you know, not a huge stablecoin guy regardless, but you know, I know that Bitcoin has its different Bitcoiners have their different opinions on that depending on which part of the world you're talking about and how stable the local fiat currency is, right? But regardless, I think it's all a joke. Like Paul Ryan said on a Bloomberg article or Bloomberg interview, I guess, earlier this year, that it's possible that in the face of a debt crisis, you know, I mean, I just think it's remarkable that you're a politician talking about how demand for stable coins in a new gray unregulated market, and you're going to bring that into the regulatory fold. Like that's going to be that's the future of your financial markets. Would you use to dominate for 100 years? It's just it's again, it's a clown show. So I do, and this gets back into the strategic reserve, and then we can talk about that as well. I talked about the strategic reserve a little bit in relation to my Nazi gold. First thing he did when he was invading the country was go to the central bank, say, let me have the keys to the vault, please. Because they needed to fund their genocide. They needed gold because the Reichsmark wasn't accepted around the rest of the world. It's kind of like the Russian ruble today, except Putin's so dumb. He maniacally dumb. He doesn't keep his international reserve shored up before he invades. But in any event, the point of that is very securely multi-sig, multi-jurisdiction, multiple backup that individuals can hold and corporates can hold and governments can hold. I think it's inevitable that the U.S. actually, the main conversation soon will be about the strategic reserve for Bitcoin. My personal philosophical views on that would go back to the Nazi gold presentation, which again we can flesh out more if you want. Where I don't necessarily think it's great if it just goes into the hands of the Federal Reserve or the Treasury, some Bitcoin. I mean that's Bitcoin that's going to be forever locked up, KYC'd Bitcoin, and you're just never going to see it again. They're going to do whatever they want to paper over it in the future. Having said that, I certainly will do it next time. I didn't have it ready. But if you looked at, you know how I always tell you that there's no assets on the world that doesn't have assets. So you have the debt, you have the national debt, which is 35 trillion, and then they have other liabilities. It's actually over 40 trillion. It's something like 45 trillion is the on-book liabilities of the United States Treasury, and on-book assets are something like 10 trillion. There's like a $35 trillion shortfall. Let me see if I can find it for you, actually. You there? You hear me?
Yeah, I'm here. We got wind and fire alarms going off, so I'm just on mute.
Yeah. Yep. I'll keep talking then for the listener here. Let me find the numbers, and then if I can find the chart, I might even be able to get it up, Logan. All right. So total, we're talking about the U.S. Treasury. This is a quick balance sheet on numbers. Let me just zoom in for you if you got this on the stream. Why is my menu not zooming in here? Forget it. Anyway, if you look here, we're at 42 and change. Logan, it's actually just too annoying to look at it this way. Let me pull out. So 42 and change is the Trez balance sheet. Yeah, this works. This is good enough. What I just showed you. So $42.8 trillion is the total liabilities of the United States Treasury. That's ending last year, September 23. That's fiscal year 2023. Total assets on the books are those three in the green there. You see, we have property, plant, and equipment. That literally is like land, like federal land that's usually out in the West. Some of it, confiscated from the Native Americans, some of it not, whatever. $1.6 trillion worth. You got direct investments and loans. This is just mostly fake money. It's investment in other schemes where the money's already been taxed, but they invest, they call it an investment, even though the money itself was already picked up and taxed. It's like one hand of the government owns the other hand's liabilities. It's just robbing Peter to pay Paul stuff. Anyway, that's 2.3 trillion. And then other assets, 528 billion. Just forget that. Bottom line, that cash and gold line, I have the last line there, cash and gold, 922 billion. That's the only hard money, hard asset as far as the balance sheet goes. But regardless, this red shaded area you see on this chart is just goes back to 1994. This is a linear chart. This is literally how the balance sheet is reported. There are no assets. People don't quite understand this. The total liabilities as of fiscal year last year, 42.9 trillion, and the total assets are less than 10 trillion. Look at that asset mismatch I have there, negative equity of 37 trillion. They're less than, it's like 5 trillion. I should have just put that on there, but I don't have it. 5 trillion in assets and only 922 billion in cash and gold, meaning some monetary gold, basically. And the hard assets is a percentage of the balance sheet, as you see there, which balance sheet is total liabilities. Here it's 6%. Last year, 2 years ago, 6.4%, 5.9%. So it's a little bit lower. Back in the early 90s, it was 23%, mid 90s. So it was higher then, but it quickly fell down to this number that is 6% of liabilities. This is what the Treasury is selling you every week, every month at these auctions. This is what you're buying. Inside of the national debt is this number.
The asset mismatch is 10x'd since